friends. Today we will discuss about various terminologies in cost accounting, the terms that actually conceptualize the subject cost accounting. Cost object. At every nook and corner of this concept cost accounting, this term is quite visible. It is an activity or a contract or a cost center or customer or product or project or process or service or any other object for which cost can be ascertained. For example, in case of hospitals, while finding out the cost for providing consultation service, here the cost object is consultation service. Similarly, in case of products, you can consider computer, mobile phone, television, car, etc. And furthermore, in case of process, while taking a textile mill, spinning process, weaving process are all considered as cost object. Similarly, for an activity, planning a purchasing order, receiving deliveries of materials, inspecting these materials, storing materials in the store are all separate activities which can be considered as cost object while ascertaining the cost. Cost unit. It is a form of measurement of the volume of production of the product or a service. It is generally adopted on the basis of the convenience and the practice in the industry concerned. For example, while taking the measurement in units of numbers per 1,000 bricks, in case of weight, it can be considered as per ton of coal. In case of length, per meter of cloth, etc. In simple, it is a unit of the product or service or time in which cost can be ascertained. In case of types of cost unit, there are two types, single cost unit and composite cost unit. Single cost unit, as the name suggests, is simple as it considers only one aspect. For example, in case of quantity of goods, kilogram, ton, etc. On the other hand, a cost unit is said to be composite when two units are merged into one. For example, in goods transport industry, the composite cost unit is per ton kilometer. For hospitals, it is per bed per day. In case of passenger transport industry, it is per passenger kilometer. Responsibility center. As the name suggests, this center is accountable for all its undertaken activities. It is an operating segment within a firm led by the manager who is accountable for its activities, performances and results, interpretation of the expenditure, profit and return on investment. In simple, it is a unit or function of an organization under the control of a manager who has direct responsibility. For management control purpose, responsibility center is classified mainly as cost center, profit center, revenue center, and investment center. We'll take a deeper understanding of all these types of responsibility center. Cost center. It is a responsibility center for which costs are accumulated. The main objective of this center is to minimize cost. It can be a department or a team which represents a job activity, process, or machine whose costs are allocated equitably and practically for the purpose of costing. There are two types of cost centers, personal cost centers and impersonal cost centers. Personal cost center consists of a person or a group, whereas impersonal cost center consists of a location or an item of equipment or a group of this. For example, factory as a location, machine as an equipment form part of the impersonal cost center. Another approach to cost center is the functional point of view. Production cost center is a center in which production or manufacturing activity is carried out. Example, machine shop, welding shop, etc. Service cost center is a center in which is engaged in providing services to the other cost centers. Example, repairs and maintenance department, powerhouse, storeroom, etc. Profit center. It is a segment of activity of an organization which is responsible for making profit. It is the responsibility of profit center to decrease cost, increase revenue, and thereby maximize the profit. In simple, profit center is used for measuring the performance of individual in charge of the center. Investment center. They are those responsibility centers which are not just accountable for the profitability of the unit but are authorized to take important decisions concerning the capital investment, such as companies' credit policies, monetary policies, inventory policies, etc. Return on investment acts as a tool for measuring the performance of these investment centers. Revenue center. It is a responsibility center in which only revenues are accumulated. Example, sales center. The main objective of revenue center is to maximize the center's revenue. So let's wrap up for the day. I hope you have got a good clarity about the few terms discussed here. Please do share your comments. For more updates, please subscribe and press the bell icon. Thank you.